questions. Carl brought up a question here, and we were looking at the chain. I'm going to check for you, Carl. Carl says, I always use the medium chain instead of the small chain. Can I change this setting? I can't find it. Well, Carl, we don't have a stored setting for the chain yet. I will work on that next week. Carl, let me write this down here. Everyone hear my writing, perhaps. So we want to lock a selection for the option chain when linking from any page. Okay. All right, Carl, I'll look into that on Monday with the programmers. See what I can come up with. And of course, I've got working with Keith as well on something else related to the analysis view in the portfolios. All right, Sam, you said you missed a few Fridays because you're busy and didn't get the chance. Well, hey, it's great to see you here today. Sam, it's great to see you here, and I'm glad you were doing so well also. While we're here, quick question. David says, what is the difference between the chains? Okay. So I'm looking to standard expiration, 6/19, which is 7 days out. We could call this a weekly if we wanted to in that case. But this is Boeing. It's been all over the map. So I'm on a medium chain. The stock's at 189.51. It has dollar strike differences. So I've got everything from the 133 strike all the way up to the 245. As Carl mentioned, this might be a little bit bulky to deal with. Well, this is the medium chain. So if I go to the small chain, for Boeing, this might work because most likely, if I'm looking to sell a call, David, or if I'm looking to do maybe even a call spread, I'm probably focusing on these top 10, top 15 strikes anyway. Whether I'm doing an out-of-the-money bear call spread, yeah, I'd probably go a little bit further out than that as well. So that's the difference, okay? It's just the amount of strikes that you can see. It really comes into play when you're looking at SPY, or in my case, KHC, Kraft Heinz, is one of the married puts that I have on right now. It has weekly options at 50-cent increments, and we just saw that when I did the bull put spread at the beginning for Carl. I'm sorry, for Chuck, not Carl, for Chuck there. So that's the difference. So you can expand it to small, medium, or large. You could also view multiple expirations, of course. I can look at all expirations, but let's say I was looking to do a calendar call or a calendar put spread. I'm on the call chain now, so let's say I was thinking about doing a calendar call. I'm going to click the hold button here over to the right for June 19. And we'll go out to August, so about 60 days out. So here's my near-term chain, 70 days out, and there is my August chain as well. So I can compare the prices. Personally, of course, you know what I'm going to do. I'm going to go right into calendar call and use the search by symbol if I'm looking to open a calendar spread on BA. So you can toggle the expirations. You can look at puts only. David, you can look at calls only, or you can look at calls and puts. I linked to this chain from the trade, the BA trade that we were tracking, which was a covered call. So when I linked to the option chain, it defaulted to calls only because I'm looking to roll a covered call. I'm probably only interested in seeing the call chain. I don't care about the puts. But if you just typed in a symbol up at the top here, and then you clicked chain here, it would take you directly to the call and put chain because you're not linked to a strategy and it doesn't know. Now, even on your trial, what you can do is you can go back previous days to see where the prices were. So that's where it was at 168.80 with the drop yesterday for Boeing, and it came back about another 19 points today, but that's yesterday's closing prices. And on your trial, you're also given 3 months of data to historically go back to. So I could go back to May 1st or June 2nd and see the option chain of the various months as well. So that's it, David. Small, medium, or large chain, calls and puts, calls only, puts only. You can use the add or remove columns, to customize the chain for your needs for what you'd like to see. And then, of course, the various expirations, and use the hold feature if you want to compare multiple expirations at the same time. All right, Carl, I will look into that for you on Monday. Oh, okay, great question. Great question. You say, sorry for the questions, Jumpy. That's what this whole presentation is, Gregor. Our Friday sessions are designed for our attendees, for our investors like you, and that's why it's the open forum Q&A. I just take live questions on the Friday sessions, no planned material unless someone sent in an email earlier in the day. Okay, great question. I get this a lot too. So let me backtrack 1 second. Years ago, a couple years ago, a lot of investors asked, well, do you guys recommend trades? And the answer is no. We post our trades as a learning experience and that Blueprint owners can follow in radioactive trading for the Fusion subscription we just talked about with Deborah. But we don't pick and we don't recommend and track covered calls, naked puts, long. The tools are designed, and we're here to help you set up the tools for what you want to see based on your trading plan and your risk tolerance, so we can get the search, kind of catered to what your needs are and the strategy that you want, and move on from there. All right. And so what Ernie decided to do is said, okay, well, in our basic search, in every strategy, we have default criteria that investors can use as a stepping stone. They're not direct recommendations, but these are the starting points that Ernie and I would use if I was going to open a covered call today or a naked put. I'd use one, or the bull put credit spread, the married put. I would start right from there. Everything that's posted in Fusion, by the way, I know I'm getting off track a little bit, 90%, 99% of the trades that I put in Fusion, almost 100% of the trades Ernie posts to the Fusion subscribers are directly from this search. I think Ernie's in, no, he's not. I think he's in JD. You just saw the one he opened on Qualcomm. That wasn't from this list, I don't think. I'm trying to see. I know Ernie's in one of these. It's not Target. I think he's in Fortinet. Okay, it doesn't matter. I was looking to see if mine were still here. Yeah, HDS Supply, that's one I'm in. Kraft Heinz one. I'll tell you this. That's a married put that I'm in right now for Fusion subscribers that wasn't on the list. Now, okay, in any case, what Ernie did over time, or what Ernie started to do a couple years ago, is he said, you know what, well, why don't we just do this? I'm going to go back in time, and I'm going to try to create a trading plan for monthly and weekly covered calls and monthly and weekly naked puts. And he probably tried over 50, no, well more than that, probably over 70 to 80 different criteria sets, different stock criteria, different option criteria, in the money, out of the money, earnings coming up, avoiding earnings coming up, and so forth. And essentially, after exhaustive testing over different market conditions, he found that the criteria that worked best were the monthly picks of the day that he created. And it's, no earnings announced, stock in an uptrend, good open interest for liquidity, positive MACD, yielding 0.8% return if assigned, not 1.1, believe it or not. He tried all of those to see what performed better over time. So it's 0.8, greater than 0.8%, and a downside protection of 10% as well. And, this is what the picks of the day are for monthly and weekly. But it also comes with a caveat. And you want to click on the see how we develop these results, because it's usually Monday morning Ernie would open these positions. But it's not morning. This one, I believe the monthly was opened Monday at around noon is when he looked to do it. And the weekly picks of the day, I think, were in the afternoon, if I'm not mistaken. So that was part of his testing. On the Monday, he would open it, what if I open right at the morning? What if I open in the afternoon? And that's why the timestamps are different on some of these, because he found that you want to wait near the end of the day, perhaps, for the weekly naked puts, and, the afternoon for the monthlies. It's just a weird trend, but that's what he noticed when he started actually implementing the real trades. With that in mind, if I'm going to open 2 or 3 new positions on Monday, likely from this bull put credit spread search. Why do I say likely? Because if something happens over the weekend and we see a 1,000-point gap down on Monday, I'm not going to be opening bull put credit spreads. Okay, there's still a lot of hesitation out there, but hesitation means what? Increased volatility, lots of nice premiums. Okay, all that being said, when I open the credit spreads, I usually wait till around 11 a.m. to 1 p.m. Why? Because on Monday morning, even almost any morning, but specifically Monday morning, there's a little bit of chaos. There's a little bit of volatility. Prices are fluctuating all over. I'm going to have no problem finding 10, 12, 15 if I wanted to trade those, Robert, bull put credit spreads on Monday morning that have an 85% probability or higher, match also my MACD requirements that I have, stock above the 20-day moving average, avoiding earnings, but still offer that minimum, at least 12% return, whether it's at 11 in the morning, right at noontime, or 1 p.m. I don't like to try to fight the market maker and grab that credit at midpoint, Robert. That's what's difficult of trying to open a spread directly in the morning, is that there's so much shifting. And you can see the shifts here. That's not a good one. Where's a real good one? This one's pretty good. NXP Semiconductors, not the stock. I'm not making a recommendation. Let's say we opened Monday morning, stock's at 106, and I've got this 93 June 26th put at 105 to 134. So we're getting a midpoint, let's call it 120. But the market opens down $1.10, $1.15. And this now goes to, it goes higher. The bid goes to 130, but the ask goes up to 140. Okay, well, I can still get maybe 135 for it, and it's tight, but then it pulls back down. Now it's only 80 cents to 75 cents. Oh, I'm sorry, 75 cents to 80 cents. The stock shoots back up, and then it comes back down. So I'm going to pull back from that. I'm not going to try to catch the credit. Instead of chase the dragon, I'm not going to try to chase the credit and keep adjusting my bid-ask because the market's fluctuating all over the place in the first half hour, 25 minutes. We'll wait till 11. I'm going to start looking for my trades then, probably place them around 12, 12:30, where I'm not getting bounced around all the time. Back to home here. Dan's initial question, which I skipped over because we were answering Octavio there, but a while back, Dan had asked, if you have time, can you spend just a couple of minutes telling what you think of the market sentiment pod and how you use it in your trading? Okay, absolutely. Market sentiment pod was developed by Ernie. Another thing he did many years ago, he did extensive testing on various market indicators and saw which ones gave the best leading indication of a market movement or seemed to work in conjunction with each other. I'm talking 70 to 80 different ones, and he found which ones had the patterns that seemed to work consistently together. And he settled on 13 different broad market indicators: VIX, TRIN, new stock, 52-week highs versus 52-week lows, the percentage of stocks that are over their 20-day moving average, how large the SPX gap is over its 20-day moving average, the number of days up for SPX, put-call volume ratio across the market, and then some other ones there as well related to SPX and the RSI of the SPX also. Okay, so I think this tool is very useful. You might want to check out this help video here. This will give you, because we're already at 6:05, excuse me. But this help video here, make sure it's the right one. It's 19 minutes long. This is a really good discussion, but it is from 2013. I've got some other recent ones there that you can pick up on YouTube, Dan. And we just saw the search for calendar calls. If you go to the PowerOptions YouTube channel, type in market sentiment. You'll see some recent videos even from January and from December of last year, where we showed what was going on with it in October and how we used it. So how do we use it? All right. Well, you see here they have these sliders, and for each one of these, each one of these 13 indicators, we were able to look at a long-term all-time distribution. For the put-call volume ratio, you see here, when is it at 1.15? Well, only 0.3% of the time has it ever reached 1.16. A ratio of 1.16. What does that tell me? That if for some reason it shot up here, it'd be very rare to stay in this level. It would have to go back, which means the puts would be increasing and likely the market would be declining, right? So that's what these fences Ernie is set for. It's bearish when the ratio is below 0.6, when there's too many calls in the market. And usually when the ratio is above 0.99, that's considered lightly bullish. Here we are at 0.74. Yeah, we're at 0.74, so we recently crested it, I believe. And so then when you hit a bearish line, you get a bearish indicator naturally. When it goes into its bullish mode, you get bullish. Typically, when you see 3 to 4 bearish and maybe only 1 or 0 bullish, you'll start to see a sell warning. When it goes to 5 or 6, you'll see a strong sell warning, like we saw recently. So strong sell warning on 6/8/2020, bearish sell, and light sell warnings leading up to it. What did that mean? This was my first indication that I needed to start paying attention to my bull put credit spreads. I made adjustments on my married puts by selling calls against, when I saw the sell warning, the bearish sell warnings and the sell warning, I sold calls against Kraft Heinz, and I had that bear call spread on HDS. So when I see something that's bearish, I may consider adjusting my bull put credit spreads. I may consider selling against my married put positions, selling calls or doing a spread against my married put positions, expecting a decline to keep most of the premium. I may adjust the put ahead of time to lower the risk before this warning goes off, depending on, again, that SIGA model we talked about for the married put position. Did I open bear call credit spreads on this day? No. Did I buy puts? No. Maybe I bought a put or two on SPY. In that case, I did. Okay, I'll be honest. I bought puts on SPY. I did buy VIX calls, though. I still thought they were too expensive. in any case. When we see the bearish sell warnings, we anticipate that there's likely going to be a movement the next 3 to 5 days of some kind. Now, I'm sorry, let me clear that up, Dan. If I just saw sell warnings, neutral was here at 4, 7, and 2. If this was 4, 9, and 0, it might have gone to a sell warning. But yeah, definitely when it got 6 bearish, 6 neutral, and only 1 bullish, we started to get the sell warning. And then we went to 8, 4, and 1. So that was the bearish sell. I think 7 triggers it. If this had stayed at 5 with just a sell warning, I don't know if I would have been as proactive, to tell you the truth. But once I saw that bearish sell, or if I saw a bullish buy, which I thought we were going to trigger today. We didn't. I know we only went up to 3 bullish indicators with 1 bearish after the poof of yesterday, after that easing off a little bit. Today it stayed at neutral as well. I expected it to go a little bit bullish, but it didn't want to, did it? And that's kind of interesting. But again, if I start to see this, I apologize, bullish buy, strong bullish buy, deep green bullish buy, I'll open new married puts. I might open an extra bull put credit spread or two. I wouldn't be adverse to that. I may even do a ratio spread, that income method number 5 we talked about as well. So yes, Ernie and I use this for trading, and I did use this the other day when it went off on 6-8 to sort of hedge my long stock positions, the married put positions with a little bit of premium as well, and to do other things also. And again, that's Dan, that's how I do it, that's how I use it. There's more information on that help video, and jot this down too. William, you needed those videos there. We were talking to Octavio about the calendars, sorry, and Dan, market sentiment. All right, just jotting this down. Okay. All right, and when I put the archives here, you'll see links pop up in the video to the other videos that go more in depth into these as well. All right. Okay, so Sam was commenting earlier, said from 5th of June to June 10th, had plenty time to buy 318 puts in SPY. 318 was the support. It was likely to break down in that situation. Best way to capture gains. Support and resistance, one of the best ways to capture gains if you catch them. Okay. Chuck says, or buying bear call debits. Well, you call it a bear put debit. It's a bear call credit or a bear put debit. Oh, Dan, I'm sorry. And the market sentiment just changes once per day. It's updated at the end of the day. So when we started the webinar, this might not have been updated yet. I think it happens at around, I think it does happen around 4:30, but sometimes I've seen it go off at 4:45 while we're in the webinar. It would have shifted from June 11th to June 12th. So yeah, it usually happens at the end of the day, only updates once per day, Dan, as well, okay? David, no. David says, does your models, and I think he means by models, he means the search results and the search tools. He says, do your models include dividend income when calculating percent returns? No. If I go into the married put, the dividend, David, is not taking off of the maximum risk. If I'm in a covered call, the dividend is not factored into the return. However, you want to do that, no problem. You can just go to calculators on any of the strategies and go to covered call, for example, or married put. And then you can plug in your numbers. This one is a 0 dividend, but you can plug in the numbers of what you'd want to see for the dividend, of course. I'm sorry, for the dividend, let's say 0.65 or something along those lines. And then you'd be able to see the original return without it, and then the new return, of course, with it down here at the bottom. Okay, that's a very high return with a dividend increase. But yes, it's not shown in the search, David, results and so forth as well. Okay. Yeah, that's a good point, Sam. I didn't think about that. You said from the 5th to the 10th of June, SPY wasn't going up much. UVXY was at 27 and wasn't going lower. That's kind of an indication that they were hitting their walls there. They're hitting their support there in that case as well. All right. Well, ladies and gentlemen, I don't see any further questions that have come in. And we are at about 6:12. I want to thank you all for joining me for this afternoon. I had some great discussions, I felt, on a lot of different topics there, ranging everything from some of the search tools to different strategies, bouncing around from married puts, calendar spreads, rolling covered calls even, and the market sentiment tools. So all good stuff there. Just want to remind everyone, of course, that today's material are my thoughts and your questions designed for educational purposes, increasing investing performance, and options knowledge. Any stocks or options discussed today should not be taken as direct trading suggestions or recommendations. Options involve risk, which we talked a lot about today, and may not be suitable for all investors. If you like some of the features that you saw today on the search tools or on the portfolio tools or the rollout opportunities available in the position analysis that we talked about on that for Maurice and the covered call rolling, simply go to powerop.com, put in your name and email address, and you'll have full access to the site for 14 days, even with access to some of the historical, as we showed with the option chain there as well. Okay, there we go. After the 14-day free trial, the subscription levels start at $45 per month. Then, of course, the delayed data is $65 per month, and you can upgrade to the historical level of service or the real-time service as well. Well, we talked about the webinars page. Some of you have some homework to do this weekend. Don't feel that you have to do all of it. And I'm going to take a 10, 15-minute break after this, come back down to the computer. I'm going to email those links I mentioned for William and Octavio and Dan as well. But you can go to the YouTube channel at any time as well. Go to PowerOptions and search for the content you're looking for by strategy. I usually try to name it by strategy. Rolling covered calls, calendar call spreads. I think I even called one poor man's covered call, but I think calendar call is the best search in that case. Market sentiment tool for Dan. You'll see other more recent videos on that as well. Okay, so that's available too. All right, and if you think of any questions at any time this weekend, remember you can send me an email at any time, support@powerop.com or support@radioactivetrading.com. Also, feel free to call us during market hours at 302-992-7971. As I mentioned, your trial members and subscribers, feel free to schedule one of those coaching sessions at any time. You can have as many as you want during your trial as well, and or as a subscriber or as a trial member, you can have as many coaching sessions you want, essentially 30 to 35 minutes with myself or Ernie as well. Okay. Oh, William says, which service is the market sentiment a part of? I think it's on all levels of service, if I'm not mistaken. Let me just go back here. I'm pretty sure it's on all of them. All right, so if you did end-of-day data, you'd still have the market sentiment tool. If you did the delayed service, you'd still have it too. So I think it's on PowerOptions, not radioactive trading, of course. Yeah, but the market sentiment is there.